You're with We Mean Business. I'm Shweta Rajpal-Kohli. The second phase of the dot-com boom in India is underway, with tech entrepreneurs experimenting with new ideas and business models. At the same time, several online businesses are going bust, or at least facing the survival test, once again bringing to light harsh realities that doing business on the World Wide Web isn't such a cakewalk. On the show today, we try to examine the future of e-commerce in India. Let me introduce our guests on the show. With me here in the Delhi studio, Pearl Uppal, founder of 5 Ideas, a seed stage venture capital fund. Also, we'll be joined in by Rajiv Dhingra, founder and CEO of What Consult, will also join us shortly. We've also got Praveen Sinha, co-founder of Jabong.com, joining us on a link, and Pranay Shule, founder and CEO of Quicker, joins us from Mumbai. Thank you all for being with us here on the show. Let me start by asking Pearl a little about the trends that are really defining the e-commerce space right now. Is it fair to say that consolidation is on the way? At least many of the verticals are seeing way too many players.
So I would say that, the fundamentals are really strong. Four key things: 100 million plus consumers growing to 300, women consumers taking to e-commerce in a strong way. Tier 2, Tier 3 markets becoming very strong consumption centers. And very clearly, distribution gap remains a key problem in this economy for retailers. Right? So these fundamentals are strong, and if you look at year-on-year growth in these fundamentals, that's very strong. So there's nothing alarming. On the consolidation, undifferentiated plays are going to become unviable, and this was expected 2 years back, that for every single offering there were too many clones in the market. And everybody was capitalized, so everybody went after the consumer pie is only that much, and I don't see anything alarming. You saying that things are going bust would be wrong. I think, like I said, unsustainable plays will have to consolidate and merge and find their way to survive. But at the same time, more differentiated plays and offerings continue to come into the market. And
so it is right now an evolving industry. It's an industry that's, we can say, it's too early to say that it's maturing. It's still in the
very nascent stage. Very nascent stage, and it's a continuum. No phase 1, no phase 2, no phase 3. A continuum of products and services that will continue to come online.
Right, Praveen, let me actually take forward one of the points that Pearl has raised here, and particularly about the undifferentiated play. The fact that, yes, it is a market that's picking up. People are slowly realizing the benefits of, say, shopping online. But what happens when there are too many players with similar offerings?
The fair question. See, the way any sector or a market works is it always has more than one player. One emerge as a strong leader, and 2, 3 coexist. And similar thing will happen in e-commerce as well. So the number of players, the quantity which we have today probably will reduce, and some strong leaders would emerge. However, as Pearl has mentioned, it's quite at a nascent stage. So today, whoever has the highest volume may not remain the highest in coming future. There are a lot of competition, and in the right spirit, which will help the leaders to start creating the differentiation. For example, there are different set of customers. Some customers are deal seekers. Some customers are very fashion forward. Some customers want better service in terms of delivery, in terms of payment options, etc. So my view would be that a strong leader would emerge as an e-commerce, and there can be a category specific leaders to say, let's say, one in the consumer durable, one in the fashion, one in the deal sites, and there would be at least 2 to 3 other players who would coexist with them. But initially, there would be a volume of e-commerce players who would start and later find their niche, close down or consolidate. It's very similar to what happened to the travel portals few years back, where we had many players, and today if you see, there are 4 big players who you would remember.
All right, Pranay, in that sense, do you think there's enough money for everyone to actually survive and flourish in this space? Because yes, it's true, if we at least leave aside the travel portals for now, because those models are well established, not just in India, but around the world. But if we start looking at other verticals, retail, for instance, or real estate, or any other verticals that we're talking about, do you think people are already making money and there is likelihood that there is enough money to be made?
Well, I think, there's a pretty clear way to look at it, which is there is, I think, enough money and some for the industry to grow and for the best players to flourish and grow. Along the way, I'm sure there'll be players that might, go through some changes, or there could be some consolidation we see. But as far as the industry is concerned, I think we are, I think all of us around the table here are in violent agreement. We've not even scratched the surface yet. So there's a lot more to come. The industry has literally been just born a few years ago. So, there's a lot more to come, and I think they will see many new players emerge and get strong over time.
Okay, Mr. Sanjeev Agarwal, Senior MD and co-founder of Helion Advisors, is also now with us in the Delhi studio. Mr. Agarwal, let's now try and understand the entire funding aspect and the entire business models that are now evolving. Do you think those business models are sustainable? And especially we try and compare what's happening right now to what happened, say, in 2000, when, yes, again, we'd seen a dot-com boom, but it all ended up in a dot-com bust.
I think there is cautious optimism in the investor community, because folks that are on a good execution track are continuing to scale, and there is weeding out of inefficient players, which happens in any sector, and the underlying fundamentals, which is low penetration of the overall retail, growth in internet, growth in mobile, growth in credit cards, those, and growth in the consumption in tier 2, tier 3 cities, for example, continue to be very, very strong. However, I must add that there are some new sectors emerging as a competitor for capital. So e-commerce normally attracts capital from people who are technology-oriented investors.
Right.
And we are beginning to see interesting opportunities in enterprise software, mobility applications. So I think e-commerce ventures are competing.
So there isn't all that money out there in terms of if anybody and everybody who decides to have a tech startup needn't necessarily get the funding. Is that right, Pearl? Would you agree with that?
So I think there is money there, to be honest.
And fewer ideas and fewer...
I think fewer ideas, differentiated ideas backed by execution capability out in the market on the e-commerce side. I think there's that phase where people are coming to the investors with a lot of ideas which look undifferentiated, and investors are saying, well, this is already either done or your team is not the right balance of team to take this forward. But we've over the last 2 months seen about 100 plus seed stage startups, and frankly I thought I would see a lot more e-commerce startups, but we saw about 10, 12, and none of them were differentiated enough to give us a sense of what are they trying to crack. At the same time, like Sanjeev said, there's education, there's healthcare, which are also they're not retail models from that perspective, but they're e-commerce really. Right. So there are competing models, and then product companies and enterprise software companies where there's a lot of more intelligent, smart thinking in the early stage happening. So there is going to be competing.
Innovation is lacking.
Innovation is totally lacking.
And it's all very, very similar ideas that are doing the rounds. And that's a worrying trend, because this is what you expect. You expect that there would be many more innovative ideas, because as we're saying, the market is out there, the funding is available, but innovation is lacking.
Yeah, but Shweta, I think that it's just a lull. I think I'm beginning to see people think through these problems, and both back-end innovation and front-end innovation, a lot more focus on curation and a lot more focus on giving customization and leveraging social for commerce. Those kind of things will come in. I don't think innovation is not going to happen. It's just a lull before the horizontal formats have started fighting the war aggressively, and I think now vertically differentiated formats will come along.
Okay, so verticals, Sanjeev, that are clearly doing well, verticals that are likely to pick up.
Verticals which will do well are the verticals that deliver high gross margin, because there is a race towards turning cash flow positive. You don't want to be dependent on investor capitals for all your life. You want to be a self-sufficient business. So I think verticals like electronics suffer from a very low gross margin. It's a top line business.
Right.
But we find verticals like baby products is a very interesting category. Apparel, especially if you can build a brand on the internet,
Yeah.
then that delivers a very high gross margin structure. We have a company in our portfolio called Yapme, which is a brand on the internet. So it's their own product,
Okay.
which is directed at tier 3, tier 4 cities. And that's flying off the shelf. So I feel that apparel, baby
Give us some more
products.
details about this particular one, because it's interesting.
So
to...
Yapme is a ladies and men's apparel brand.
Why is it differentiated from the others?
Number one, it's a brand, so they are
Okay.
not retailing somebody else's product.
Okay.
They have the entire design to delivery capability.
Okay.
2, it is directed at a tier 2, tier 3 market.
Mm-hmm.
3, it is directed at people who normally go to a tailor for getting their clothes stitched. So this is a ready-made product replacing a tailor. It has a very modern look and feel, but the typical price for a shoe, for example, is 450 rupees. So you can get a fashionable shoe for that kind of a price. So
Okay, so it's really got its target audience defined, and it's got a very niche product,
Right.
and the margins are high, as you're saying, because it's their own product. Okay,
Exactly.
All right, Praveen, in that sense, what's the future looking like? Because we clearly now need to understand what is it that will differentiate one .com from the other. Here we've talked about some categories that are likely to pick up. Also explain to us the behavior of the online consumer. How is the online consumer behaving right now? Are there specific trends that you're picking up, and innovations that are very unique to the Indian market? For instance, cash on delivery.
See, I think both innovation and incremental improvements are important, because for customer experience, you need to plug all the leakages that can happen. Even if you design the best processes, certain leakages will happen. But the current situation where we stand, there is a huge opportunity to bring on those incremental changes, which will overall deliver a differentiated service level to the end customer. And again, to add to it, innovation, and I'll take delivery as an example. So let's say most of the websites do provide return, no questions asked policy, etc. But when the courier company delivers the product, the customers don't have the choice of checking the product and returning it then and there, because then it is more convenient for everyone, all the stakeholders. But as a process, we were not allowing that to happen, let's say a few months back. And there the innovation can come. In fact, Jabong did try to do that, and they are doing it successfully, where the customers can check the products at their doorstep in the cities where they use their own network of providers. So having said that, so service and as has been shared by most of the participants here, delivery and distribution is one of the strongest area where a lot of innovation and small process improvements can happen. It can be created by an integrated player. It can be created by one of the e-commerce players. But definitely one area of unique experience that we can create. As an e-commerce, as a platform, there are a lot of differentiation can happen. But how easy or difficult will it be to copy is the second question, and how long will it take? For example, let's say product offerings. So how many assortments or how many options do you provide to the end customer? And the combination can be 50,000 to 5 lakhs option at a given time. And to the customer, it's very easy to discover, because he doesn't have to, physically walk through the mall or anything. He has a filter to discover his own products. So he is spoiled with choices, and if he's very clear what he wants, the probability of getting it at that website is high. The second would be the fashion forwardness. Let's say, for example, most of the websites would be offering the best price in terms of deals, etc. What is the latest in fashion that can be brought on the table? There are not many players who are doing it. Third would be, again, in terms of customer centricity. How much do you actually pay attention to the last level of details to ensure that, most the customer experience is treated even more important than many other variables which drive the business fundamentals as of today, because in long run the customer repeat rate or customer loyalty is going to be important. Though the customers are getting very loyal to the sector itself, they are not very loyal to a particular brand. So how do we create that? So I think a combination of lot of efforts will start creating it, and there would be a lot of players who would start becoming strong in one or the other areas, which will start becoming a differentiation factor, and the leader would be who would deliver the best in more than one variable rather than one.
All right, Rajiv Dhingra, founder and CEO of What Consult, is also now with us in the Delhi studio. Rajiv, explain to us the behavior of an online consumer. What drives a consumer today to shop online as opposed to in the real world, to do the virtual shopping? And do you see that trend really increasing and picking up? Do the Indian demographics really support the growth of online businesses?
So 75% of the Indian online shopping population is between 18 to 34.
Right.
Right. And that tells you that they have some sort of disposable income, and they are at that age where shopping is one of the things that they do fairly frequently offline.
Right.
So that's one aspect. Second aspect, I think this industry started with the promise of goods at a value which was lower than what you would get offline.
Is that sustainable is my point.
I don't think so. I think.
Would you agree? The fact that I'll get a perfume 20 or 30% cheaper online may drive me to go online as opposed to buying it offline, but is that something that players can sustain?
It depends on what goods you're trading.
Okay.
But it's not at a broad base, it's not sustainable. But then, let's say flash sale model, it's still sustaining itself and continuing to attract consumers across the globe, right? Vomprivé is a clear example. Now, it's a question of what inefficiency have you found in the supply ecosystem, which the online has been able to, let's say, make it efficient. But otherwise, broadly, if there is only discount-based retailing, and that's one of the problems, like every online retailer, no matter what they're doing, unless they're in a 60% gross margin kind of a vertically integrated play like Yepme, right? Every online retailer will need to have 4 to 5 transactions a year from one customer. Now, if everyone's going to go out giving coupons and freebies to customers, same set of customers, 5 players are attacking. That's what is creating the problem, which everybody is calling right now a bust. But it's really, it's just economic fundamentals.
But how
so
long can you sustain it is the point?
Full price models and discount models, like in the offline world, both will coexist.
Okay.
Right? So it's not like we do shop and sales offline, right?
Right.
But it can't be one or the other alone.
I don't think a 365 days, 24/7 sales model is going to work.
Right. Do you feel that a lot of players are doing that?
At least they started with that. Right, and now I think
that was just for customer acquisition.
Well, it was the early days of e-commerce. Money was flowing in easy. Customer acquisition was the prime aspect that they wanted to do. So everybody did it.
So I think also think of discounting as a marketing cost.
Yeah.
Right.
That you get the customer in,
right.
and then you start selling him at a regular price.
Customer acquisition in the online world is much tougher than offline?
They have too many options. That's the challenge, right?
For
each brand.
Too, right?
Offline, there's a challenge of distance,
Okay.
You can't be present near a certain customer where he stays all the time, and only larger players can build that kind of presence. Digital, there's no challenge of distance. If you deliver at my place, then it doesn't matter which brand you are.
Right.
So I think the value has to come beyond just the transaction. What is that experience that you can create both online and offline? Offline, a lot of players are starting to do that. With the way they deliver, the way they package the goods, the way it comes to you. All of that is part of an experience that the customer has with the brand. Now, how do you create that same experience online? And I'll take off from a point that Pearl mentioned about social commerce. I think that's an area in India which is still under-leveraged, right? So, last statistic by Comscore stated that 37.5 million unique e-commerce users, visitors were there for e-commerce in July month. And about 61 million are totally Facebook users, active users, right? So there is a lot of overlap between, and if you, by industry talks tell me that e-commerce guys are spending anywhere between 30 to 40 lakhs a month on Facebook ads, directing them that to their website. So I think there is a niche there to bring the experience a notch higher as to what the products are being bought, by whom are they being bought, and for what purpose. And if there could be a social layer on top of e-commerce, I think that would add a value which could probably be a differentiator for some players, which currently doesn't exist.
I think the other piece that I would like to call out is that e-commerce is also a platform for small and medium business who cannot get online by themselves. So there are 40 million small and medium businesses in the country, and through a model like marketplace, you provide them a platform where they can sell their products. So I think this inventory-free business model is the other piece which has very strong potential.
Very strong.
Because
and again, underexplored and untapped?
I would say there are marketplaces beginning to emerge. Maybe they will also get verticalized, or maybe they'll be horizontal.
Sure.
What I am starting to see, and I'm coming fresh from hearing this from several players, 3 big brands, and I wouldn't like to name them, are one in the beverage space, one in the luggage space, one in the clothing space, is now looking to launch their e-commerce brand portals and not just distribute to third party. So at some level, you might see that this boom of e-commerce with younger startups who got funded and have now got customers used to shopping online is going to really benefit the big brands who spent all monies offline and now are going to take their shops online with a known market available for them.
All right, I'm going to ask Pranay and Praveen if that's a concern for them. Pranay, first to you. Is that the real concern? Because you've spent a lot of time, money and effort in trying to convince people to shop online. And here, the big daddies in the retail space, be it a beverage firm or an apparel firm, will just come and establish their online brands. And you know what? A lot of your customers may shift there.
Actually, it's, what Sanjeev just said is actually music to my ears, right? Because Quicker is a marketplace. So, what he's saying is exactly right. See, what is happening is right now we have pure play e-commerce players who are each running their own store online, right? But there are other platforms which are more marketplaces. So when you look at pure play stores, maybe there'll be a few dominant horizontal players and then there'll be verticals like others, just mentioned. But this entire notion of marketplaces actually has its own, appeal to specifically a market like India, because I think some of the challenges that we are talking of here, relating to logistics, relating to costs and so on, a marketplace kind of model can, in some ways, bypass a lot of these issues, right? Where a local business who's right next to the consumer is actually offering the same products online through a marketplace. So I think, that's another model where I don't think, any of us here would feel like that, one model can just take away all the customers from the other model. The point is, I think there are multiple models that are likely to emerge. Some of them have emerged, and some of them will actually gain more strength as we go. But there's a place for a lot of these models to play in the market together.
But now let me move on and try and understand the regulatory challenges with regard to e-commerce. Is that a concern at all, or do you think we have nothing to worry about on that front?
So, I usually don't comment on regulatory challenges. We have,
but there are plenty.
There are plenty, and there are plenty at all fronts, whether it is payments, whether it is FDI in retail. I find it very baffling how online was just kept aside for FDI in retail in the recent discussion.
Is that a real concern? Is that a big dampener?
I am not an expert on regulation, unfortunately.
Sure, so fair enough. But are there issues that need that? In the overall, when you talk about the overall ecosystem for online businesses,
Shweta,
there are support systems.
There are a lot of operational issues that get created. So, one part is the investment side, which is, like I said, FDI and all that. There are a lot of operational issues that getting your goods across to every state. You have to follow different laws for different states, different tax regimes. I mean, it's a nightmare, but it's like, I don't think that's why e-commerce is not happening or happening.
Okay.
Yeah, but it can always be an enabler. I don't think any smart entrepreneur thinks that this is a disabler and I can't get around it, but it is an enabler if it happens, right? So
there are clear roadblocks there.
Clear roadblocks for which you have to spend a lot of bandwidth every day solving for if you're running a company. So.
Pranay, would you agree with that again? That we sometimes think that it's all very easy for you to set up a business online, get customers, and things are fine. But actually, the kind of paperwork you still need to wade through, the regulatory challenges are as hard, if not more, for an online business.
See, it's like this, right? Most of the change in the world actually comes from people's behavior changing, not from the governments, changing it for them, right? So, typically the government policy might have a little bit of a phase lag with where the market is today, and it'll take time to fall in place. But the reality of it is, I don't think this is something that we cannot, solve over time. It may take like, maybe a year or 2 or 3 as the, regulations get more mature. But, it definitely is not at a point where we say that, because of this, the industry just cannot flourish. I just don't think, that can happen just the way people's behavior is changing, right? I mean, another way to look at it is, and I heard this interesting line recently, which, some of you must be familiar with, but if you look at people around this table right now, right, we at best are migrants into this digital culture, right? But there is an entire generation of natives that has grown. And these people, they actually, this comes much more naturally to them than even us. So given that, I think there is an entire generation that is going to use these platforms. So the regulations have to fall in place. It might take time, but they'll get there.
Okay, so that's clearly encouraging that we are going to see regulations falling in place. But let me now try and understand where the growth is happening. We've discussed verticals, but we now need to discuss markets. A lot of players now tell us it's tier 2, tier 3 that are big growth drivers. Would you agree?
I think they're a very big source of growth. I don't think that metros are not growing, but yeah, a large part of growth in slightly mature business models, like let's say apparel, there are several players, and electronics, there are several players. You'll find that those players are saying that their growth is being fueled by the tier 2, tier 3. But then the baby care market, for example, you'll find even moms in metros hassled for time and convenience. They are flocking towards that faster than the tier 2 moms, who probably have a little more time at hand or more serviced economies with help available.
So it entirely depends on what model you're talking about, but there is
significant growth is coming overall in the e-commerce place from the tier 2, tier 3 markets.
And I think one reason is that organized retail has still not penetrated a lot of tier 2, tier 3 markets.
Right.
So it's an access issue for many consumers in that part of the world, which e-commerce is solving for.
Would you agree?
Give you an example. We're working with this e-commerce player who's in apparel, and one of his most loyal customers come from Siliguri.
Yeah. Okay. So
one of the larger contributors, and the reason it sticks out, very startlingly, is Northeast, from where there is a lot of traffic and buying behavior coming from. So I think the point is fairly right. Where there is not much availability offline is where online becomes the first preference, no matter what the price.
Okay, Pranay, very quickly, if I could ask you, where is it that you're seeing maximum growth coming from when it comes to customers of Quikr? Which are the cities, or is there an obvious trend out there?
I think for us, so I think certainly non-metros are growing faster than metros. A lot of it is also because they are growing off a smaller base. If you look at our user base today, maybe we have half of our users coming from metros and the other half coming from non-metros. The non-metros does continue to grow fast, and I think for us, given that we operate in a slightly different classifieds kind of commerce marketplace, a lot of it also has to do with the fact that newspaper classifieds are not, really as strong in non-metros. So that further fuels to the growth. But I think if you look at the industry overall, there's no question, non-metros have a lot of they had a lot of supply issues because of it. The consumers' aspirations were just not being fulfilled. I mean, I grew up in a small town, Udaipur. I still go there, and I know, how people's behavior there is changing. If you look at the way they have started ordering things online, that definitely is growing very fast.
All right, it seems to be growing very fast, but what's the real future of e-commerce in India? We continue our discussion after a quick break, and Ashish Sinha, founder of nextbigwhat.com, is also joining us from our Bangalore studio. So all that and much more coming up in just a bit. Don't go away. Welcome back. Here with We Mean Business, and we're discussing the future of e-commerce in India. Ashish Sinha, founder of nextbigwhat.com, also joins us now on the show. Ashish, that's exactly my question. Next big what?
Yeah, so one of the, if you go back to the offline behavior, who makes the buying decision in a family? It's typically the lady of the house, right? And the lady of the house is not online. So we need more women to come online to actually make e-commerce, the real commerce. I guess most of the men, they end up buying stuff that you probably don't need, right? For example, all the gadgets and accessories and all of that stuff. But that has been the first phase. The second phase, I would say, is where the women will drive the smartphone and the e-commerce usage in India. And similarly, the major category player for e-commerce would be, around, say, apparels to, and the access will, in my opinion, it won't be just a desktop. It'll be smartphones as well, the apps, right from apps to, tablet devices, enabling people to buy, more products from their systems, right? So that I believe is going to be the big changer, in the next 1 year.
So are we already in that phase that you're talking about where more and more women are going online? I know, Pearl, you touched upon it a little earlier, but is that significant shift happening already or still a long way to go?
No, so I would say that the shift is starting to happen. Over the last 1 year, we've seen a significant change. From what stats I see now, about 40% of online consumption is by women. I mean, this was, I think, about 12 months back, just sitting at about 30.
In fact, just hold your thought, because why don't we get Praveen to actually tell us if that's the case on Jabong.com, for instance. Praveen, are you having many more women shopping on your site, or is it still skewed towards the men?
So thankfully, we have seen a very strong interest and trajectory from our women customers. And if you remember, our ads also tried to cater both sides to it. So first it was trying to target the female audience, then the male audience, etc. And to at least from our Jabong's experience, what we can say is that it's equally significant for both men and women. And we have also found, and which is not a discovery, people know about it, that women prefer shopping more frequently than men, and they are more fashion forward compared to, so the decision making is more what latest has come, at what price point has come, and the men decision making is more on convenience, brands, etc. So you will find a lot of insights which I would say interesting, but observe very similar to what we see in the offline model as well. So for us, it's very important that we cater to our women audience.
Okay.
Yeah, I would say, Shweta, also that if you look at social networking, women are there in huge force now in India, right? So it's a very large women networked economy waiting there for services and products which are going to be relevant for them online.
And a bit of it is happening already. So, so if you log on to Facebook, there may be small, I wouldn't say small startups, but there are people doing business already with their own community of 500, 600 friends. All of that is happening.
So I think relevant as more, it is now the onus of, I think that women are there online. Obviously, more women are welcome and we should do more to, but social networking is getting a huge part of them.
Okay.
Content ecosystem is weak for them online in India. But at the same time, there is a huge base. Now it's left to the service providers and retailers to figure out not how to target them, but to actually create shopping experiences which they enjoy. While Jabong is doing a great job of a search-based Amazon-like experience of fashion, but at the same time, I think women like to shop with friends. For women, shopping is a discovery process. Discovery is as important as buying.
Exactly.
And shopping with friends is an entertainment experience. So I think more entertaining and curated experiences for shopping, more parenting services. There is, stuff happening there. As more relevant offerings come online for women, women will move from just social networking and emailing to commerce in a big way. So I just see that beginning to happen over the next 24 months. I think there'll be a lot of activity which will curate to, I saw a LimeRoad as a business get started recently, I think funded by Lightspeed, if I'm not mistaken, which is now openly saying we cater to women, right? Fashion and You was built on the fact that 75% of our transacting customers were women.
Right.
So I think more and more such players will come online. And
any innovative models that have sort of stuck or anything that's sort of clearly caught your attention in the online space?
So just taking that women conversation forward, we have a lingerie brand we work with, Peri Peri Skinwear, which has actually launched its print advertising and its online platform parallelly, even before the offline distribution becomes complete in that sense. So it's almost as if online is as important for them as offline distribution.
And they will go offline, but they started online. So it's actually a reverse trend, Sanjeev, as we're talking about. He himself had mentioned earlier that there are large retail firms or other firms who are established players offline who are now looking at going online. But how about companies that now believe, let's start online first?
Yeah, my view, Shweta, is that online businesses need a very strong technology DNA. And I feel that people who come from the offline world will have a struggle in getting the technology DNA right. So while respecting his views, my belief is that that transition is going to be very hard. And good example is that Walmart took a lot of time before they could get their online offering in the marketplace.
Exactly.
By which time Amazon had galloped because they had built it around a technology platform. I think one area that we are seeing a lot of strong adoption is on online services. So for example, a company like Policy Bazaar, which allows you to comparison shop your insurance policy. So if you have a car and you want to buy auto insurance every year, then this lets you look at 5 insurance providers and buy it electronically. Or a company in our portfolio called Taxi for Sure, which lets you book a taxi online. Currently taxi operator is a very, very fragmented industry. And it's a pain actually being able to hail a cab. So services is another sector which is beginning to scale on the strength of travel. And the good news about service is that the friction is much less, there is no inventory, so they are a lot more scalable.
Yeah, and it's easier to make money also.
Yes, and a lot more profitable therefore.
A lot more profitable. Ashish, would you agree with that, that services is the next big thing when it comes to the online space, and as you said, perhaps offers you better margins, it's easier to make profits as well?
I guess, for example, so if you look at taxi services, some of these services are very regional focused, so scaling them up is very tough, and that's where a more platform approach works. For example, I mean, if you look at, say, a Redbus kind of a model, they have the amount of money they're making from being the backend for bus operators, the tour operators, is much higher than, much higher in the long run. That's, I mean, from the consumer segment, right? So the product versus service is where there'll be a lot of, I would say, consolidation that will happen over the next few years, especially in some of these segments like taxi, because you'll always find that, there's one company which is very big in a certain key region and has no presence in another region, right? So as far as e-commerce is concerned, I guess some of the focus areas, like I said earlier, could be around the access point itself. For example, the whole mobile apps / the devices that could drive a lot of adoption in the coming days.
Okay, Sanjeev, would you like to quickly respond to what he said about taxi services, the scalability worry with regard to it?
No, I mean, I liked his mentioning Redbus because that's one of our portfolio company.
Okay.
But I think it's opportunity and a threat. In the sense that you have to build these businesses region by region. That is very, very correct. And I feel that because of that, a first mover develops a very strong competitive advantage. Does it take more management horsepower? The answer is...
How quickly before the clones come up and perhaps start doing a better job? So even if there's a first mover advantage, wouldn't you? And that's my next question. Do online consumers have loyalties or not?
So my sense is you got to be 1, 2, at best 3. So you got to be
space.
You got to be in that category in 1, 2, or 3. I think in India, within 1 year, every business model gets replicated. So then it is dependent on the quality of management team that started out that business. Does it have a good combination of domain and technology? So I think sometimes we overestimate the advantage of first mover.
Yes, that was my question.
I believe in being an early mover and not being a first mover. Because then you can learn a lot from what first mover has done wrong. But you should
better me too, clearly.
But you have to be within the range.
Yeah, it can't be too late.
If you start a broad-based e-commerce company today, it ain't gonna happen.
Yeah.
But you can certainly do a taxi company because it's a very early stage of the business.
Praveen, my question to you really now is something that I tried to also understand and answer in the first segment, but we didn't quite get the answer. How difficult is it to make money, and how soon before players actually start making money? And the ones that I'm talking about are, of course, the recent startups, maybe 1 or 2 years old. How tough is it to make business and to make money in the online world?
So again, a tricky answer. See, it depends on the vision. So if you want to really scale and become profitable at the same time, it doesn't go hand in hand, because the amount of fund required to grow would be more than the margin can support, especially the market scenario that has been created. For example, almost everything is being given free logistics, free return, etc. So if you go with that model so that the trust is built with the customer, you will not have enough margin to grow. So if the vision is to make it, so keep it simple and small and become profitable, why not? It's a very profitable model to begin with. It can be started by someone in house if he or she has a vision of making it like a small or SME kind of a business model. But if you really want to leverage the potential of e-commerce, which is of scale, so the number of orders can be more than 10,000 per minute, not even a day. So that is the potential, and if that is the vision, then the fund requirement and the gestation period for it to become profitable would go longer. However, I think the way that the market is shaping out, it's in the right direction. In terms of what I had seen a few months back, there were some decisions which were not in the right business fundamentals. For example, discount going beyond what the model can sustain, or the coupons which can be misused, etc. were there. But now things have really stabilized and are in the right direction, and hence it will now take a fair value of time even with the scaling. So my sense would be that if you want to scale and grow, 3 to 5 years is good enough. If you want to become profitable and that's your focus area, 1 year is good enough, but then the scale will be compromised.
All right, so profitability in a year, that's not so bad, and you're saying growth and scalability in 3 to 5 years. Would you agree with that time frame, Pranay?
You know, there's this thing we say in the technology world, and I think it applies to profitability of digital businesses also. You know, technology related trends are always overestimated in the short run, but heavily underestimated in the long run. You know, so if you look at the, you know, exactly like, you know, what we just heard, if you are in the game for making a large company, you have to be a little more patient, right? Actually, it applies to any realm of life, not just digital businesses. But there, I think the rewards are disproportionate in the digital realm. So it just is a fundamental choice. You know, if you want to be a small company but a profitable one, you can get there pretty quickly. But I think most of the people in the market today, and you know, for the right reason, they are you know, they are building it for the long term, and you know, we'll see some of them emerge as winners.
Paul, how long should a company, an online firm, really wait before it says it's not going to make money? I mean, how long, what's the time frame for actually breaking even and starting to make money?
So again, I think I echo the sentiments of the co-panelists, that there is the e-commerce way of distributing products is a very efficient way. And if the margins, like Sanjeev earlier said, that if the margins are strong, I mean, you can't sustain on a 5% margin in any business, e-commerce or not. But if the margins are decent, right, any retailer who has a 25% plus margin post shipping, right, is a retailer. Now,
is that possible is my point?
Totally possible.
Okay.
Totally possible, right?
Okay.
And the thing is that in that you have to take a conscious call, like Praveen said. You can be profitable in 8 to 12 months, or you can just say that I'm going to play it big, and then you need a 5 to 7 years gestation to turn profitable. So 3 to 5 is a very strong statement. I still think it'll take 5 to 7 for these larger companies which have gone for scale, but then the fruits are larger. But is e-commerce, and I have in my personal network, without naming, personal network friends who using e-commerce from their homes have created really viable businesses where they're churning profits of 6 to 8 lakhs a month. they're living a good life, working, you know. So these are businesses which were made out of literally their drawing rooms, right? But they have the capability to design, control their supply chain, and then there are logistic providers to take it forward to the customers. But if you're building a large-scale business, you can't turn profitable in 2 to 3 years, and there the capital that has gone in has to be patient. Overnight, there's not going to be any magic.
All right, no magic overnight clearly, but Rajiv, let's also try and understand if there are any risks here on, because what we're clearly seeing is, without taking names, there are some large online players who are clearly facing the survival test, and we're already talking about a dot-com bust. Are those fears real?
See, I think some of these players, along with their investors, have played the role of a market builder.
Yeah.
Now, it's not necessary that someone who's a market builder also is the one who bears the fruit of the opportunity in the end. And that means that if there will be some carnage, so be it. You know, that's going to happen. To what extent? I think largely the e-commerce space and the buying behavior, from all the research reports that we read and from people around us that we see, is positive. I think what will differentiate players will be beyond the price, beyond the product that they are selling, will be the service that they provide. Okay. How they package, how that package comes to your house, how receptive are the service people. I think that's the differentiator in any business. Even if you look at airlines today, the most profitable airline is profitable because of several service benchmarks that it has created. I think that's where the game lies, and that's where e-commerce players will have to go a notch above others in trying to wow its customers into loyalty.
Okay, and is the wow experience lacking right now? Is the fear, Sanjeev, that some players, some consumers are probably just testing the waters, but may not get that wow experience, so will be there, but will soon go away? You know, is that the fear?
And Shweta, there are all kinds of players in the country. So there are folks like Flipkart who deliver a very strong customer experience, and there are websites which are very focused on marketing and have not paid attention to their back-end fulfillment and customer service. So it's very hard for me to generalize on this subject. I think it will rest on the quality of management teams that have started these businesses, which to my mind is an area that doesn't get the requisite attention. Okay. The category is proven globally. It all depends on the quality of CEO who's running the show.
Ashish, your views, and if we could also start taking closing comments as we're running out of time on the show. Ashish, according to Rajiv, the real differentiator will be the service, but Sanjeev feels it's all about the management team and its execution capability.
I guess one of the key things that we haven't talked about is the data, you know, the CRM capability. See, one of the questions that you raised was, you know, are customers loyal to these e-commerce sites? I would actually flip that question and say, are e-commerce companies buying a transaction or they are acquiring a customer? Most of them are acquiring a transaction. They're not acquiring a customer. They haven't yet built a CRM system in place where they can identify that, you know, this person buys products every 2 months, and these are his, you know, favorite categories. So, you know, some of those key elements are totally missing with e-commerce players because most of them have been building the backend, and I believe the technology backend of understanding data and, you know, making use of the data to, you know, through a different view to the user is what will drive the differentiation among the players, right?
All right, and with that, we're going to wrap up this very interesting discussion that we've had on e-commerce and its future in India. Clearly, it is at a very, very nascent stage. Businesses are still evolving. New models are still evolving, but there is a huge need for more differentiated business models and players, a need for better services as well as management teams that have the capability to deliver. Thank you all for joining us and sharing your views on We Mean Business. You, the viewer, can also send us your feedback on our discussion. The details are coming up on your screen. Thanks for watching. Goodbye.